I used to do this all the time, so it's not a new thing. I was a massive culprit for it. Price would just shoot you in one direction, and you're like, oh, there goes the move. I've got to get in. So anyway, I asked him the question as to why he thinks so many people do trade like this and chase that move.
Well, first of all, I never chase the market. That's a golden rule for me. You can look at any price chart, and let's just average this out. It prints 3 candles, 4 maybe, before it changes color and goes the other direction. So let's say you get in on candle number 3. How much of the move has already happened? It's about to come back. So I mean, it's a bit different when you see it like in a where there's conviction and maybe supported with a bit of volume in a strong breakout. And on occasion, you'll get out, like, let's say it's long, you get a whole bunch of green candles, right? Before you get a red one. Yeah. But the further that move goes, the later you're getting in, the more you're chasing the market. So understanding the market conditions before you make a call is absolutely vital. Because like you say, well, if I don't get in now, well, that's all right to say that. But understand, you first want to identify that that's a strong breakout, and that if I don't get in now, I might not be able to get in at all. Now, there are other methods that you can use. You can drop down to a smaller time frame, get in with a limit order on a smaller time frame, which would be my preferred way ultimately of doing it. Yeah, but you do risk the market just continuing without you, and you're not involved. That's an advantage of, if you like, buying up market or using the stop order. But no, I just don't believe in chasing the market. If on most of the time it's only going to print 3 or 4 candles and come back, I don't want to be selling on candle number 3 or number 4. I'm trying to get in at the beginning of the move so I don't have to chase the market. So when you think about it, that move has to start from somewhere. So the current move that's happening, let's say it's going down, it's eventually going to stop and it's going to go back up. Even if it only goes back up 10 pips, 15 pips, whatever, it goes back up. There was a reason there that the market went back up. There was a bunch of orders there. People, bigger players executing their trades. There was a clear, reliable level there. So there was a bunch of orders to go long. I don't want to trade into that. The longer the more you chase the market, the longer it takes you to get involved in a trade, the more likely it is that you're going to get involved at a level that you haven't identified. And then what we all hear is, what is everybody, we've heard it 1,000 times. I got in the trade. I got stopped out pretty quickly just for the market to go turn around again and go back in my direction. And that would have been the best trade I'd have had for the day. See, what did they do? Where did they get in? Especially if they're using a tight stop loss, right? If you're using a tight stop loss and you get in on top of a level, well, the market bounces back up. You get stopped out. It bounces into another level. We're talking shorts here, so it bounces into a bit of resistance, and then the market goes down back in your favor, but you're not involved. You're already stopped out. I mean, that happens all of the time. And yet, how do you identify where the problem points are in your trade? What's going to make your trade underperform or get you stopped out if you don't identify any of these levels? And these levels are where institutional traders are trading. They're the ones that print the candles, not the retail traders at home. So when you see a chart with no analysis on it, and you say, well, you're not identifying where your trade can go wrong. I don't like to use the word wrong. There's no right or wrong in trading. But if you don't identify where the market is probably going to turn around, what are they going to do? They're not even going to move their stop, because the old saying is, don't even touch your stop until you get to your trade gets to 1 hour. I move my stop when it hits a point of it's a level. Okay, I said, right now it looks like price action down here on a low time frame. Now it looks like the market's going to come back up. If I don't act now, the chances are I'm going to get stopped out. So I act. I don't sit there and pray like so many novice traders will do. And I see that all the time. I've just seen a bunch of posts over the last few weeks, a whole bunch of them, where the traders are just needlessly getting stopped out because they're not acting. They're not managing the trade. And I once learned that the money is made in your trade management. So if you don't trade manage, you don't do any analysis, what you're doing, you're really shooting in the dark. If you're not identifying where other traders are going to step into, especially institutions, where you're going to step into the market, then how do you know that your position is under threat? You don't. So sometimes it just bewilders me, but that takes time and it takes knowledge. Yeah. And conversely, you can obviously use that to your advantage when you're actually getting into a trade. We'll do that, right? Novice traders will do that. They'll get a strong candle, a setup candle with trend at a moving average, something like that. Yeah. Okay. And all of a sudden, the market just, once the low of that candle gets taken out, the market just drops down. There was plenty of people participating in there. See, they're using that information to get in a trade, but they're not using that information to either stay in a trade or manage their trade or prevent them from getting in a low probability setup in the beginning.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide. All right, folks, so there we have it. Hopefully you got some massive value from that. Now, this is just a teaser as to what JJ can offer. This guy has an absolute wealth of knowledge when it comes to anything to do with the market. We've got a bunch of traders over there in Gold Rush Alpha, as I've mentioned. If you guys are looking to find out more about this, then what I recommend doing is checking out the link below this video. So we've got a free PDF and video there where JJ breaks down the difference between what we're doing at Gold Rush Alpha and I suppose what a lot of other traders are doing out there. And what we're finding is some massive success. So we'll drop another video up here where we go through the results of the club so far. It's only been open for 2 months, and we're getting traders who've taken 11R trades, 14R trades, 8R trades. It seems to be every week somebody's getting a massive R trade, which is ridiculous. And also, we've got our first funded trader in there as well. So this guy went from not being funded, and within 2 months, and it was before the 2 month mark, he managed to get himself funded. So that was fantastic to see as well. We've got tons of cool stuff in there, which is quite different from a lot of other trading groups. So we actually have a losing trades room. We want to know when people lose, and we want to know what trade it was and what they took, and we'll help people work through that loss and understand why they lost that trade. And so you feel like there's a safe place to put your losing trades in there as well. So folks, if you're interested in that, then what I would recommend is head down below, check out that link, get the free PDF, get the free video, learn about Gold Rush Alpha, and there might even be a coupon there for you as well. So check that out. All right, thanks for watching, and we'll see you in the next one.